Hey, what's up you guys? Welcome back. So in case you haven't noticed, the stock market has bounced back quite significantly since the last time we spoke, and I've gotten some members of the community messaging me and be like, hey Andy, I think I missed the dip. Do you still think that there are any stocks out there currently that are still potentially undervalued? And the answer to that question is yes. So today we're going to talk about a company named Lightning eMotors and why I think that this is potentially one of the last undervalued companies in the electric vehicle space. Before we begin though, I just want to preface by saying that I am not a financial advisor and this is not financial advice, so please do your own research before buying anything, and I'm not telling you to buy this stock, by the way. So as of making this video right now, also I don't have any positions in this company so far, but I might pick up some later. So I just want to put that in front of me first, right? So anyways, don't forget also I do have referral links down below for ShakePay and Newton, which are exchanges here in Canada that allows you to buy cryptocurrency, which is also all the rage these days. The referral bonus for ShakePay is $30 when you sign up and invest your first $100 worth of crypto, and the referral bonus for Newton is $25. Okay, anyways, with that out of the way though, let's jump in. So first, let's go through a company overview of Lightning eMotors. So they're an electric vehicle company, as I said, but they're primarily focused on the commercial side of things. So what's special about them is that they retrofit Ford vehicles into electric vehicles. So what that means is that they buy the chassis from Ford and then they put their own battery electric systems in. So if a customer comes in with a fossil fuel vehicle, they can rip out the insides and then put their own electric system in, or they could just start from scratch and they just buy the chassis from Ford and then just build one from there on. As you can see that they can retrofit passenger vehicles as well as cargo vehicles. So they have a lot of options, and I think they have like city buses as well. They can retrofit pretty much just any like vehicle. So I really like this business model because instead of building everything from scratch themselves, the things like chassis of a vehicle is going to be the same no matter if it's a fossil fuel vehicle or an electric vehicle. So instead of doing everything from scratch themselves, they can just buy the chassis from another company like Ford and then just focus on building an electric powertrain system, which is what they're good at. As to whether or not this business model is working, well, Lightning eMotors already has customers with real orders. So it already has a backlog of around 1,500 orders that it still needs to fill. And these are binding orders, by the way, which is much more than what can be said for other companies. So you guys know that I'm invested in a company called Hyliion, which is another company that competes in this space. And don't get me wrong, I'm still bullish on Hyliion, but it would be nice to hear some announcements from time to time of some solid binding orders for Hyliion, which I'm still waiting for that. And with Lightning eMotors, you get that just right out of the gate. So Lightning eMotors claims that it has a $67 billion TAM, which, by the way, TAM, in case you don't know, stands for Total Addressable Market. I'm inclined to believe them because I do think that this like commercial vehicle, electric vehicle space is going to be huge because many places are already pushing towards electrification and zero emissions, and the commercial electric vehicle space is obviously no exception, right? The commercial space is going to have to electrify as well. As for the management team, you got people from Tesla, and a lot of the management team does have experience working in the energy or transportation related businesses in the past, so that's always good to see. And I've also seen some interviews with the CEO, Tim Reeser, and generally I'm getting some pretty good vibes. I think he really understands the problem and he really understands the need to go towards electrification, and I think that he knows how to get there. Now let's talk about the valuation, because I think that that's what's mostly so interesting about the company right now, because I've actually been watching this company for a while, but I've never really bought into it because it was like $15 or $16 for the longest time, but now that it's come down quite a bit, I do think that it's a lot more interesting now. So in case you didn't know, yes, this is another SPAC merger. I'm sure you guys are tired of SPAC mergers, but I do think that some of these SPACs are really interesting actually, so that's why I always talk about them. Now with this one, if you wanted to buy in, the ticker symbol is GIK, which is called GIK Capital 3. That's the name of the SPAC. Now, if you were to talk about the details of the pro forma valuation at $10 per share and around 82 million shares outstanding, the company was valued at about $820 million, including the cash that they have in the bank, right, or on the balance sheet. Which to me, that under $1 billion valuation seems pretty cheap for like an electric vehicle company, right? Now at today's prices, or at prices as of making this video, it's at $12.39 per share, which you're getting just over a $1 billion market cap. And if you just subtract the cash that they have, well, the company is still valued at under $1 billion, which to me seems like, again, really cheap for an electric vehicle company, right? So if you just compare this to, let's say, Lucid CCIV, well, Lucid is valued at what, like $25 billion or something? Now, correct me if I'm wrong. I haven't been following that news like really closely, but it's valued at like super high. I know it's like around over $20 billion at least. So obviously, something like a Lightning eMotors is not going to be as sexy as a Lucid. I understand that. However, personally, though, looking at the valuations, I'd much rather buy something like a Lightning eMotors than Lucid. So with Lightning eMotors, recently the stock has also been put under some pressure, not only because of the general volatility in the general stock market, but because that there has been a delay in the SEC giving the green light for the merger. So I'm not an expert on mergers and acquisitions, but from what I understand, that every time there's a SPAC merger, the company does have to submit a lot of documents to the SEC. Now, the SEC may at times come back with more questions if something is not clear, or if they have just general questions. So it appears that that's exactly what happened with Lightning eMotors, where the SEC came back after reviewing the documents, and they came back with 6 more questions, which Lightning eMotors have already responded to. However, we're all going to have to wait for the SEC to review the responses and then give the green light. Therefore, this news has unfortunately caused the delay in the merger, as it was originally scheduled to happen at around now, March 2021, but now that's being pushed back because the SEC is still reviewing the answers. However, I think that this is only temporary because I do believe that the merger will be approved at some point when the SEC gives the green light. So when the merger date is announced, I do see this stock bouncing quite decently, maybe back to its previous highs of around $16 per share. And remember, because this is a SPAC, you do have that $10 floor. So if the stock is $12, the worst thing that could happen is that you lose $2 per share, right? It drops to $10. Because if it drops any further, well, then you can buy shares for cheaper than $10 and then redeem them for $10. So that's kind of like an arbitrage, right? So that's how like it works, because the money in the bank account of like the SPAC merger of GIK Capital is worth $10 per share, right? So like the net asset value or NAV of it is like $10, or maybe it's a little higher than $10 because there's a little bit of interest in there too. So my point is that you do have that $10 floor to work with. So yeah, you're not really risking that much when you buy at $12 per share versus if you bought at like $16 per share back when it was $16 per share maybe like a month ago, right? So I wouldn't be surprised that if the stock starts to spike up with any type of good news, considering how cheap the stock is right now. So when the merger data is announced, or if they have any other good news, the stock will probably go up quite a bit. Probably, right? I don't know. I can't predict the future, but the way that it's looking at right now, I do think that this is quite a good deal potentially. And congrats to you if you picked up some shares of Lightning eMotors a couple of weeks ago, or I think last week, when it was just like $10 per share. So, if you picked up at like $10 and what was it, like $10.30 or something crazy like that, then you're pretty much getting like no downside whatsoever, right? But even at $12, I do think that this is kind of a steal at this level, and I'm pretty bullish on this company. So as I said, I don't have any position in this company right now, but I might pick up some shares later this week. Who knows, right? So with that being said, though, I'm going to end the video here. Be sure to hit the like button if you enjoyed the video, and consider subscribing if you like the series. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye-bye. or a gasoline vehicle or like just a fossil fuel vehicle, right? So